Bringing us home today is Little Green Pharma, ASX code LGP. Little Green Pharma is an Australian company that produces and supplies medicinal cannabis products, including oils and capsules. They focus on quality and regulatory compliance to provide therapeutic benefits for various health conditions. Presenting for the company today is CEO Paul Long. Paul, thank you for your time. Over to you.
Thanks, Abby, and thanks everyone for joining. Let's jump to slide 3, please. Great. I'll begin today's presentation to give those listening just a bit of a snapshot about who we are and an update on our progress. But we are a vertically integrated company here at Little Green Pharma. So we were the first company to produce Australian-grown medicinal cannabis back in August of 2018. And since then, the company's seen some significant growth throughout both the Australian market and the European market. So we have 3 sites. We have one in Perth, we have one in Busselton, which is the southwest of Western Australia, and then we made an acquisition of a very large site up in Europe, in Denmark, several years ago now. So that's a large cultivation site with a 30-ton capacity, and we've invested heavily in our strain genetic bank. So we have over 20 strains now coming out of both that site and our Busselton site. We continue to invest in R&D, and we have a large distribution network now across the country and 26 products that we sell into the market. One of the things that we've done, we've made some changes inside the Australian market over the last 12 to 18 months is really have a look at the medicinal market and start to look through a slightly different lens, being more of a fast mover consumer goods lens, and start to think about segmenting the market slightly, whilst it's still a medical market, segmenting the market and think through the lens of the patient. And so that has seen us successfully launch our Cherryco brand and a number of other brands in the market with great success. Thanks, Abby. Jump to the next one, please. So I'll also just jump into this slide and give everyone a bit of a snapshot around what's sort of happening globally in markets that tend to push the trends inside the medicinal cannabis space. But what we have seen, if we kind of zoom back out and look at the industry, the volume that we've seen come out of particularly the Canadian market and the scale of what we've seen in the US market has in many ways influenced the Australian market here in the last few years. In particular, the volume we saw out of the Canadian markets had an oversupply of product into both the Australian and some of the European markets, and that certainly had an impact on prices that we saw in the market. We're beginning to see that inflection point now change, and we're beginning to see the power go back into the cultivators now in some of those negotiations. So I think that oversupply was a direct result of some significant investment and capital raised back in sort of 2017 and 18, when we had a bit of a bubble in the industry, and that there hasn't really been capital for our market for a number of years now in that sort of meaningful amount, and that's resulted in a lot of those bigger cultivators to scale back and or not really be around anymore. So that volume we're seeing has kind of flushed out of the system, which has been a positive result to find a balance and as I said, a bit of a trend towards power back into the cultivators. And we obviously have some large capacity in Europe and in Australia for that space. If we look at the European market, it's been a big focus for us, and there's been a bit of a resurgence really in some of those markets, in particular the German market. I'll speak a little bit more about that later on, but they down-scheduled or their regulatory framework halfway through this year, and we've seen a significant increase in demand out of the German market, and our Danish side is just a 2-hour drive from the border. The UK market, we're seeing some really interesting growth opportunities there and some big reorders, and France is another one I'll talk a bit more later on. What we see in the market is kind of the fundamentals, the stocks, including what we believe our stock is priced well below normal fundamentals, and we are seeing the competitive landscape change significantly. And we predicted this. There'll be, like any new industry, you get a bit of a shakeout period and a maturity phase throughout the market, and we think we're getting towards the end of a shakeout period and moving more towards a mature phase, particularly here in Australia, and that favours the stalwarts and the producers like us that have been here and built a really solid brand in markets like Australia. Thanks, Abby. So this slide gives our listeners a bit of a snapshot of where we operate, and the numbers on this slide actually represent the numbers in which we delivered product into. So obviously the foundation of who we are and is Australia. We hold a significant market share here in Australia. What we know in Australia is that we believe that we're approaching close to 1 million patients in this country. So that is a significant volume of patients with a medicinal cannabis script here in Australia. One of the fastest growing medicinal cannabis markets in the world, if not the fastest. So it's clearly a focus and a foundation for us. Having said that, Europe has been a significant focus for us for a number of years. And I think if we look at the green countries on screen, they represent an active market of about 380 million people. And so for us, when we compare the opportunity between our 26 million in Australia and the opportunity in Europe, clearly we are heavily focused towards growing that European presence. But as a company, we've been really early movers. We were one of the first into the German market. We're early into the UK market. We're one of only a handful, I think 7 or 8 products in the Polish market. We're one of only 2 or 3 companies to have ever delivered into the Italian market. And of course, the French market is really interesting for us. So that has been under the French government has been running a trial for a few thousand patients over a number of years. We're in a transition period at the moment. We expect that market to open up in late 2025, early 2026 at this stage. And that will be a medical market. That will be a very difficult market to access. You'll need to submit very technical dossier-driven products, and we expect to be there to be limited competition inside that market. 65 million people, a very, very big opportunity for us, and our brand is the number one currently inside that trial, and we believe we'll have a very significant first mover advantage into the French market when that opens up. Thanks, Abby. And so this gives you a bit of a trend of our revenue and cash receipts. As you can see, over the last 4 to 5 quarters there on the slide, it's been a really positive trend. The last quarter was a really, really significant quarter for us to talk to the market about, and one in which we have been building towards for a long period of time. As I mentioned before, access to capital in small cap world, but also in medicinal cannabis world, has been a challenge. We do take the view that there's a bit of a commodity style cycle to our industry. So what that's eventuated for the industry is there has been a bit of a shakeout, and for us it's been a focus on cash flow break even. So we've spoken a lot about that, non-stop about that for the last 2 years. So when we announced our September quarter and we had a positive cash flow quarter without any R&D support, because we went over that 20 million revenue, it was a huge milestone for the business. And the exciting thing about that quarter, with our $10.2 million unaudited in revenue and $10.8 million in cash receipts, is that there was nothing really too lumpy in that quarter. We gradually built into that quarter. So we expect to see continual growth from there. And I'll jump onto the next slide, please. So this slide gives our listeners a bit of a breakdown of our products. So the top graph there has a look at the quarter by quarter. What is quite interesting, I'll point out on this slide, is you'll see that in the September quarter, so FY25 Q2, that we had a significant increase in our flower sales. So that has been the lion's share of our sales for a number of years now. We also had a pretty significant increase in our oil sales, driven both by some increased sales into the Australian market, but also inside the European market as well. And if you trend line out year on year in that bottom graph, you can see that we're growing across categories, and we have continued to focus on that new brand segmentation to deliver more growth on a quarter by quarter basis as well. And importantly, just to note that obviously FY25 is extrapolated on a straight line basis. This slide gives a bit of a look into the breakdown between Australia and Europe. So we can see what was interesting in the most recent quarter is the light blue section on the top graph. You can see we had a pretty significant increase into the European market, and it was driven by some French deliveries, but also some repeat orders into some of our UK customers, and some increased demand that we're seeing into that German market. So as I mentioned before, the German market has down-scheduled THC. Is no longer classified as a narcotic, and what that means is still a medical framework at the moment. So you still need to see a doctor in Germany, but typically that's a telehealth consult now, given the change, and then it's very easy to access the products. There's been a huge increase in demand inside the German market, and the flow-on effect for that, we'll see that in the coming quarters and years. As I mentioned before, we have a 30-ton site. The site that we have in Denmark is just a 2-hour drive from the border. It is the biggest site in Europe, medicinal cannabis site in Europe. The company that we acquired that site from, Canopy Growth, they invested north of $100 to $120 million in that site, and we purchased that site for $20 million a few years ago, and we own that site debt-free. So we are incredibly well positioned to capitalize on that German expansion, but the broader European growth as we see that expand as well. And the bottom side there, you'll see that again, year-on-year growth, and you can see there that we're trending more towards the European growth, but some really solid growth out of the Australian market, which continues to be a focus. However, we do predict if we push this out in years to come, that light blue section will continue to be where we see all the significant growth, given the opportunity in that market. Thanks, Abby. This slide just captures I spoke before about the market segmentation. So Cherryco was a very successful launch for us in the market. It began when we sat back and watched the dynamic shifts in the Australian market. We see that there was a demand for higher quality flower, and flower that we were growing both in Australia and up in Denmark, that was graded. So there was a patient push and a doctor push towards larger flower, and higher quality flower, which meant that we ended up with sort of 20 to 30% of each crop that sat in sort of our B flower category. And so what we've done is utilize that flower category to build out a new brand, being Cherryco. So it's a cheaper price product in the market with a higher volume, and we're seeing a significant growth inside that category. That's been a big success for us, and we're looking to launch a number of new brands in the coming quarters. So this slide really captures our full position really as a business. You can see here that our annualized revenue on a quarter by quarter basis is the red line there. You can see in the grey bar section that our debt position has also been shrinking over the years, to the point that at the moment we have only 3.3 million of long-term debt. Which is a really comfortable position for us to be in, particularly if you look at our net tangible asset position. So the big difference between us and many other companies is we are an asset-backed company. So the site up in Denmark is, we not only do we own the land, we own the building that the Canopy invested $120 million in, we own the farm next door, we own the houses, we own property in Busselton where we cultivate. So we are backed by hard assets, and those hard assets have a value of more than $70 million, which is less than half of our market cap or our enterprise value at the moment. So we do think it's a very undervalued stock at the moment. And even if we look at our enterprise value to our annualized revenue, we're probably trading at just under 1 times. And that is for a company that is A, asset backed, and B, one that is emerging into markets now that are really significant inside Europe, and a market that is not blue sky. We know this is a market. We know this is a product that's working for patients. There's, as I said before, almost 1 million patients in Australia that have those scripts, and that big European market is a number of years behind the scale that we see there. So we now know that we're in a market that will scale. Thanks, Abby. This is just a bit of a summary of how we compare in an ASX level with our peers, but I'll jump onto the next slide to give you a bit of a summary. So since that slide I showed before, there was 20 cannabis peers in 2022. But we've now seen 7 of those companies either suspended or delisted. So as I said before, that shakeout period we believe is happening, and it does position those stalwart companies that are here, that are cash flow positive. There's not many of those that can capitalize and capture that market. So we saw this big trend of of competition in the market, we believe we've hit a bit of an inflection point in that now, and we're starting to see the consolidation inside the market. And we've actively said we want to play a role in that consolidation. So that'll be something to watch for us into next year as well. But there's only two of those companies on that previous slide have positive operating cash flow, and it's only us with an actual positive growth on that side as well. We've got the highest percentage of revenue growth for companies with a similar revenue, and the majority of those companies actually have an operating cash outflow, which is actually greater than their cash on hand in the year. So we do think that we will see more suspensions, delisting, consolidations in this market. Again, is probably a good thing for us. And for those that follow this industry closely, there has been some negative press on this industry. Some of the poor actors out there that have tried to capitalize on such a growth market. We applaud and really happy to see that happen from the sideline. For us, the spotlight on those players means that we move towards a more mature market quicker. And in addition, the regulator, namely the TGA, have really been focusing on targeting those poor players out there in the market. So again, just puts those companies that are well positioned to capitalize on that opportunity. Thanks, Avi. And I think this might be one of my last slides, but a corporate overview. I guess a couple of points to note on this slide would be that Tiga Trading is Thorney Investments, based out of Melbourne. So they've just recently increased their holding up to 19.9%, which is a fantastic sign. They've been a long supporter of Little Green Pharma and continue to support us. And then between Fleeta, who is a director, and the board and some of the other senior team, there's a significant percentage of the company held, which gives a strong alignment between the people running the business and the shareholders. Thanks, Abby.
Thank you, Paul. So thank you for your presentation. A few questions from me if you have the time.
Yes, absolutely.
Great. So firstly, how did you outlast other cannabis stocks listed on the ASX, and how do you differentiate yourself from current competitors?
Yeah, look, I think for us, getting that first mover advantage was really, really critical, and we did things a little bit differently from the start. So what we found, some of our peers sort of came out and raised a bit of capital when there was a bubble in the market, and put all that money into areas like building large cultivation facilities. For us, it was a proof of concept, and growth. So our Bustleton facility, for example, we started in the size of this small room I'm sitting in today. And then once we released Australia's first product, we then rolled into another room and another room. So we only ever spent shareholder capital on what we could see the market would look like in the next 6 to 12 months. We didn't overinvest to begin with, and we're very smart with the use of shareholder capital. So that was the first one. And then I think we've built a really trusted brand in this country. So we execute well. We work really closely with all our stakeholders, and that trust has enabled us to sort of be the go-to company, or one of the go-to companies here. And then for us, we here in Australia, the framework in which we work from a GMP perspective has enabled us to enter the European market early. And we highly value that first mover market. We actually highly value the markets that have the highest possible watermark on quality. And there's a few markets around the world. I've mentioned a few of them, but Poland is one of them. France is another. So those markets we love because there's fewer competitors. We have the capability to submit those very technical documents called dossiers into those markets. And typically there's not many competitors out there that can do that. So that's probably been our real point of difference.
And could you talk a little more about your new Indicare brand and what role you see this playing?
Absolutely, yeah. The Indicare brand is a brand that's specifically set up to work with a pathway to deliver products into veterans. So that'll be an important part of our business. But as I said before, there's a couple of other exciting new brands that we've been segmenting the market on that we will be announcing in the next few quarters.
And could you talk through plans to distribute to new territories and increase your sales in current territories?
Yeah, so new territories for us, again, really focused on the European market. So the German market, as I mentioned, we expect to see some pretty significant growth even in the next few quarters, but certainly in the next few years as that market really opens up with that down scheduling. The UK market is a really interesting one because you still technically need to see a specialist rather than a GP to get a script, but we're still starting to see some really interesting growth there. So the repeat orders that we've seen out of the UK market has been as strong as we have seen in 6 years. So we're expecting some decent growth there. And of course, as I mentioned, the French market, the Polish market, some repeat orders. So European scale is where we expect to see some significant growth. But not to discount, and you saw on those slides, the Australian market, we continue to see some really solid growth here. And maybe we sit at 4 or 5% of the population with a script, but there's still 15% of Australians out there with a chronic sleep issue. There's still 15% of people out there in Australia with chronic pain issues, and there's people out there with anxiety issues, which is a growing condition. So all of those areas, we still think there's some significant growth here inside the Australian market as well.
And last question from me, Paul, is there any potential for mergers or acquisitions?
Yeah, look, we've pretty actively actually spoken to the market about consolidation. So we do believe there's some really, as we believe we're undervalued at the moment, we believe that there are a few other really good companies out there that are undervalued. So we're pretty actively having a look out there, spending a bit of time to see what opportunities may exist both here in Australia and into the European market. So yeah, we'll be actively having a look, and we do believe that that last slide we've got on screen there, we do believe that there'll be a bit of a shift in our market into next year, the small cap market, but also a realization that this market's here to stay, and a lot of these companies are undervalued. So we like the idea of bringing a few companies together that may be able to be the real leading player in the space.
Thank you, Paul. That is all we have time for today. Thank you for a great presentation. We'll get you on in the new year. Hope you have a great weekend.
Thanks, Abby. You too. Thanks, everyone.